Qualcomm stock, ticker symbol QCOM. Is this the best dividend growth stock to buy right now? Qualcomm stock is down 34% year to date, which is quite a lot compared to the S&P 500, which is down almost 21% year to date. Investors love the dividend of QCOM, and with reason. Dividend yield is at 2.45% and payout ratio is really low. But to be honest, I think there's one more thing that I like even more about QCOM stock. In this video I'm going to show you real quickly what Qualcomm does, the historical returns, the fundamental analysis, dividends, some competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Qualcomm do? Qualcomm develops and licenses wireless technology and designs chips for smartphones. Qualcomm's IP is licensed by virtually all wireless device makers. The firm is also the world's largest wireless chip vendor, supplying nearly every premier handset maker with leading-edge processors. If we dive in the latest earnings report, we see a few interesting things. First of all, a revenue of 10.9 billion, up 37% year-over-year non-GAAP. Qualcomm has two main segments, QCT, which stands for Qualcomm Technology, and QTL, Qualcomm Technology Licensing. QCT is by far the biggest segment, representing 86% of the total revenue. EBT margin of 32%, up 4 points year-over-year and in line with guidance midpoint. So this looks all good to me. QTL represents 14% of the total revenue and has an EBT margin of 71%. Which is significantly higher than the QCT segment, also in line with guidance midpoint. In total, Qualcomm returned 1.3 billion to the stockholders, of which 0.5 billion in share repurchases and 0.8 billion in dividends. If we zoom in on the biggest segment, QCT, we see that handset represents 6.1 billion, which is 55% of the total revenue. This sub-segment is up slightly below 50% year-over-year. Another interesting sub-segment is automotive, a pipeline of 19 billion but only representing 350 million right now, but a lot of potential here for Qualcomm. If we zoom in on the Q4 2022 guidance, we see that it's expected that Qualcomm will have a revenue of 11 billion to 11.8 billion and an EPS of $3 to $3.30. And of course there are a lot of key announcements that Qualcomm presented, but I'm not going to cover them in this video. I will put a link to the investor presentation in the description, so make sure to check it yourself. And now that we know more about Qualcomm, it's time to check the historical results to see what happened there. I decided to include the S&P 500 as a benchmark since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. Next to that, I decided to include Texas Instruments, ticker symbol TXN. Intel, ticker symbol ENTC, and Advanced Micro Devices, ticker symbol AMD. On the 5-year chart we see a few interesting things. First of all stocks did beat the S&P 500 by a big margin, except for Intel. Qualcomm stock returned 200% on the 5-year chart including dividends, while the S&P 500 returned 63% including dividends. TXN returned 108%. Intel minus 19% and AMD returned 410%. But please notice the big drop late 2021 in this graph for the red line, which represents AMD. It went down a lot. On the 1-year chart we see that all stocks had a negative return, but Qualcomm did better than all stocks with only a minus 1.5% return. The S&P 500 is at minus 10%. Same story for TXN, and Intel is at minus 46%. And AMD is at minus 32%. On the 6-month chart it's pretty much the same story. All negative returns, but QCOM didn't do very well with an almost minus 20% return. The S&P 500 is at minus 16.5% and TXN did the best with only a minus 8% return. Intel had a minus 42% return and AMD a minus 38% return. On the 1-month chart we see a minus 4% return for Qualcomm and a minus 3% return for the S&P 500. TXN is nearly flat and Intel returned minus 11%. AMD returned minus 15%. So in most cases Qualcomm did very well. But does this mean to buy the stock? Well, let's check the fundamentals of the stock to see if Qualcomm stock is a buy. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Qualcomm is a 137 billion market cap company with a PE ratio of 10, which is significantly lower than the 5-year average of 28. So that's very interesting. The current PE ratio of 10 could indicate that they are undervalued. Later in the video I will give you my 3 price targets to see at what prices Qualcomm stock could be a buy. So make sure to watch until the end. Next up is revenue. Qualcomm has a trailing 12-month revenue of 42 billion, and in this graph we see that revenue really took a big jump since 2020. The year before 2020 revenue was flat, so this is something to keep in mind. The demand for chips is very high right now and companies like Qualcomm are generating a lot of revenue. But there could be the case that revenue will start to slow down in the coming years when demand for chips slows down as well. So definitely keep an eye on the revenue growth. Net income is at 12.8 billion, which gives us a profit margin of 30.5%, which is significantly higher than the 5-year average of 16.7%. So I do like this a lot. But again, in a time of high demand, margins tend to be higher. So it's the same story as with the revenue. Keep a close eye on this number. Return on assets is at 14%, which is above my 10% minimum. So I do like this number a lot. Return on equity is at 100% and also above the 10% minimum, so this looks all good. And now the most important number, return on invested capital, or ROIC. Qualcomm has a ROIC of 21.2%, which is above the 10% minimum, and also above the 5-year average, so they really know how to invest their money, and I do like this number a lot. To me, it's very important that big companies like Qualcomm have enough cash on hand to pay down a big chunk of the total debt. I prefer companies who can pay down at least 35% of the total debt. In my other videos you will see that I preferred companies who can pay down 50% of the total debt, but I decided to lower this number to 35%, which is around a third of the total sum. Right now total debt is at 15.5 billion and total cash is at 6.8 billion. This means that Qualcomm can pay down more than 40% of the total debt, so to me this looks all good. But it's really important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, do acquisitions, research and development and all other things. In this graph we see that free cash flow is going up and down quite a lot, so this is something that I don't like. I prefer companies with a bit more steadier and consistent pattern here. But it also makes sense, since revenue and net income is going up and down a lot as well. So keep an eye on the free cash flow. One of the things that I do like a lot are the shares outstanding. You want this number to decrease over a longer period of time. I really like when big companies like Qualcomm are buying back a lot of shares. And to be honest, I prefer buying back undervalued shares. In the past 5 years they bought back roughly 25%, which is really a lot and added a lot of value to the investor. EPS will go up, which attracts other investors, and PE ratio will go down. On top of that, it will be easier to maintain and increase the dividends. And since we're talking about dividends anyway, let's check the dividend scorecard. Qualcomm has a 2.45% dividend yield and pays an annual dividend of $3, or $0.75 each quarter. Payout ratio is at 23%, which is really low. This means they have 77% left in cash to buy back shares, do acquisitions, pay down debt, research and development and all other things. So this looks really good. The 5-year growth rate is a bit low at 5%. And to be honest, I prefer a 10% or higher here. Qualcomm did increase the dividends for 18 years in a row, which is pretty impressive. Overall, I think a great dividend scorecard, especially for this type of company. Next up are the fundamentals of Qualcomm versus some major competitors. I decided to include TXN, Intel and AMD. We see that TXN is the biggest company in terms of market cap. Both Qualcomm and Intel have the lowest PE ratio here, but to be honest, I don't think there's a real winner here. Qualcomm has the second highest revenue growth year over year and also the second highest 5-year revenue compound annual growth rate. Net income compound annual growth rate is also the second highest at Qualcomm. AMD is the winner here. Qualcomm also has the second highest gross profit margin, but TXN is the winner. Same story with the net income margin. Return on equity and return on invested capital are both the highest at Qualcomm. Qualcomm has the lowest cash to debt ratio, so all other companies in this list are doing a better job here. Last part of this competitor analysis will be about the dividends. Qualcomm pays the lowest dividend yield of 2.45%. Both TXN and Intel have a higher dividend yield. Payout ratio is the lowest at Qualcomm, which is a good thing, but TXN has the highest dividend growth rate. Qualcomm has the most consecutive years of dividend increases. Overall, I think all companies are great dividend payers, except for AMD, who doesn't pay any dividends right now. But does this mean that Qualcomm stock is a buy? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. I expect revenue to slow down a bit, since it will be harder to grow in high numbers when you become bigger and bigger. On top of that, I think the demand for chips will slow down based on previous earnings of other companies in this industry. So I fill in 3% for the low assumption, 5% for the mid assumption and 7% for the high assumption. For the profit margin, I'm filling in 20, 25 and 30%, since I expect that margins will decrease a bit when demand slows down. Free cash flow margin, I'm filling in 16, 90 and 22%. And for the PE ratio, I'm aiming for 12, 13 and 14. And it's the same story with the price to free cash flow. I don't want to overpay for a slow growing company. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Qualcomm stock is at $121 a share. I hit analyze, and we do see a lot of green numbers. We have a low price target of $67 to $84, a mid price target of $95 to $125, and a high price target of $132 to $180. To me, the mid price target is the most justified here, so that means a minimal potential in value, but it could be undervalued based on this mid price target. My final conclusion on this stock is that I really like most fundamentals. I'm really excited to see the upcoming quarterly results to see what's going to happen with revenue and margins. This will decide whether or not I'm going to change my price target. For now, I'm waiting for the stock to come down. It's not overvalued that much, but I think there's not a lot of potential either. I do like the dividends, but I also want to value play this stock, which means it needs to go down quite a bit to $80, maybe $90. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.